भारत का कोहिनूर रहा नहीं, हमसे बिछड़ गया है.
Mr. Tata was really somebody who was very, very humble, very graceful.
Ratan Tata was a great man, a great mind, and a great son of India.
India will miss him greatly.
He was a perfect gentleman and perfect Indian.
I'd like to be remembered as a person who made a difference. Not anything more, not anything less.
Whenever the economic history of modern India is written, I would feel that a full volume will not be enough to describe his achievements.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, it's a quiet day on the Nifty. We've been sort of flitting with about 30, 40, 50 point gains, but the gains are being sold into. Banks were much stronger. This is the last 60 minutes coming up. You're with us here on Closing Bell, coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Nigel is joining us as well. Guys, hi, good afternoon.
Hi, good afternoon. And also quiet day in the market, almost as if sort of mirroring the sentiment out there on the streets of this city for sure, and the country at large. And the next couple of hours are, of course, really important because 3:30, I think the procession will move from NCPA in South Mumbai right now, and it will then head towards Worli, which is where we are, where our studios are situated. You can see the images coming through, dignitaries, including the Home Minister, coming in to pay their last respects. It's been a day that will not be forgotten. And of course, we all remember a person who shall never be forgotten, Ratan Tata.
So yeah, I mean, those are pictures coming through. And I think you can see Mr. Noel Tata, N. Chandrasekharan, the chairman of Tata Sons, meeting with the Home Minister. From the morning, we've been, of course, showing you various visuals. The Maharashtra Chief Minister, Mr. Eknath Shinde, and Devendra Fadnavis are also there. We, I think, had, the NCP leaders earlier this morning come in to pay their respects as well. Sad scenes, but that's what's happening right here in Mumbai at the NCPA grounds. And of course, you can see Piyush Goyal there and other government ministers, government officials, etc. also there in the crowd. So we'll keep sort of having, we'll cut back to these visuals as we as we get you what's happening after the demise of Ratan Tata late last evening. Okay, all right. I think we got just to move gears to the market. We also having we're getting the mutual fund data, the numbers which are coming through, and Surabhi will address this in just a bit. I want to just put out 2 or 3 points for you. So the Nifty is absolutely flat for now. Bank Nifty is doing much better. So that's point number one. The Nifty Bank, the last I checked, was up a full 1%. You've got the Bank Nifty, which by the way is almost close to yesterday's high. Not quite there, but was close to yesterday's high. And above that, you've got 51,826, which is the first stop. That's the first retracement. Actually, it's very close now. We're above yesterday's high because we are at, say, 51,640 and about 200 points away from where we are now on the Nifty Bank. That's a 38% retracement of the recent fall. Mid-cap index is taking a bit of a breather, advances more than declines. And it's a complete flip-flop in pharma and healthcare. You know, pharma healthcare were 2 of the 3 indices yesterday which ended with gains of 2% each. And yesterday the market ended absolutely quiet and flat, right, from the day's high. Today, you got a 2% reversal on the downside. So both healthcare and pharma indices are down 2% each.
Well, it's HDFC Bank and Kotak Mahindra Bank. Kotak Mahindra Bank in particular is up close to about 4%. So that's leading the charge for the banking stocks. In fact, that's pushing up the Nifty Bank to a 600-point rally. And HDFC Bank, even Axis Bank, Innocent Bank, these are stocks with gains of more than 1%. So banks are holding up one end of the market almost single-handedly. Outside of that, you've got BEL, which deserves mention, 1.7% up. Most of the PSUs have done well. Power Grid is up and about in trade. NTPC in the green too. On the way down, we spoke about pharma. Cipla, Sun Pharma, Lupin is a big casualty today. And keep your eye out on IT names, particularly TCS. TCS had a sudden sell-off at about 1 hour back. It went down to about levels of a cut of about 1%. Since then, it's bounced back. But clearly some nervousness ahead of the numbers, closer to 334. But had a look at the numbers?
Yeah, I'm actually pouring through the details right now. There's so many subcategories. The headline seems to be that the flows have moderated just a little bit, because the net equity number is now about 34,000, just under 34,400, which is slightly softer than the 37,000 that we were getting earlier, 34,393 versus 38,200. So there's been a minor dip that's come through. In terms of the categories, actually not much changing. Mid-cap and small-cap funds are still drawing in the money, little less than the previous month. On the large-cap front, there's been a slight dip, because the number that was about 2,600 crores has come down to 1,769. So large-cap funds have drawn in a little lesser than August. The mid-cap and small-cap trends are still very much intact. I'm also looking at, let's look at the picture on NFOs, because NFOs, we've had a total of 27 this time around. You know, this is how the industry is really pulling in the money, and the total 27 NFOs, they have mopped up around 14,575 crore rupees, which is a little higher than August. So the product innovation continues, and many more offerings have come in, both on the active managed side and the passive managed side. Those are some of the initial headlines that have come through. If we talk about the total size, I mean the total assets under management for the industry, then the figure has now crossed 67 lakh crores. So the total sort of size of the mutual fund industry continues to grow, albeit there's been a small dip on the equity fund side. We'll keep getting you more updates and more details. Categories like multi-asset, they've really been taken up in a big way. Balanced Advantage and multi-asset funds, they've been drawing in a lot of money, and that trend has been a very consistent one. So I'll come back to that and some more details in a bit. But Nigel, what else are you looking at?
Well, that's right. It seems there is some kind of rotation that's taking place today, because you have the Bank Nifty, which has done well, which has actually been a relative underperformer. And you have the sectors like tech as well as pharma that's come in for profit taking. That appears to be the case on the screen as of now. And, though the mid-cap index is down, but still, if you look at the breadth of the market, it's still in favor of the number of stocks that are advancing. How do you position yourself, though, for the final hour of trade? We have Mitesh Thakkar, who's back with us. Hi, Mitesh. Good afternoon. Well, it's been a nothing sort of day, right? We are hovering around this 25,000 mark, 80 points higher, a little bit lower is what we've seen during the trading session. On the index, how would you trade it? And also the Nifty Bank, do you think it's getting ready for a bigger move?
Actually, the Bank Nifty is, slightly behaving differently than the Nifty, because the Nifty is still contracting. And the Bank Nifty is showing some kind of a rebound today, and especially, led by some of the private sector names. So I'm not sure, if the Nifty doesn't go, will the Bank Nifty continue going up? The important resistance on the charts of Bank Nifty is at about 51,830, 40 zones. In case we start clearing that, then maybe we'll explore long positions. But till then, I don't think, I'll treat this move as a bounce back only, and therefore avoid trading the Bank Nifty also. Beyond 51,830, 40, then, maybe look at a test of 52,500 plus levels. So then there could be a trading move there.
Okay, so avoid trading the Nifty. It's perhaps just a bounce back. Mitesh, what about individual stocks? Anything?
On the stock side today, I think, pharma names are under pressure. I think you were also highlighting this. Cipla is breaking down, so sell here with the stop at 1633. Look for targets of 1580. And the other one, which I like, is the Coromandel Fertilizers trying to recover from oversold levels. So buy here with the stop at 1600 for targets of 1665.
Okay, thank you very much for that. Lots of mid caps, though the index is down close to about 0.4%. The advanced decline ratio is in favor of the stocks advancing. So we've got about 3 stocks in the green for 2 in the red. Mazgaon Dock Shipbuilders is up nearly 7.5%. Garden Reach is up 6.5%. Fertilizer names like RCF and NFL too. So as a pack, fertilizer is also higher in trade. But let's get to the stock of the day, and that's Kotak Mahindra Bank. Abhishek now joins in with the latest that he's picked up. Abhishek.
Well, to begin with, in April of 2024, RBI had put restrictions on Kotak Mahindra Bank and stopped it from disbursing unsecured loans, that is credit card loans, and many digital application as well. So RBI had asked, Kotak Mahindra Bank to stop issuing new credit cards and onboarding of new customers through their online and mobile banking app, which formed a higher percentage with respect to, incremental flow that they were getting on the business front via digitally. Just to give a background, significant concerns had arisen to RBI with respect to IT examination that they did on Kotak Mahindra Bank in 2022 as well as 2023. So failure on bank's part to address these concerns in a comprehensive manner and timely manner is what spooked RBI with respect to putting the restrictions on place. So RBI had observed serious deficiencies and non-compliances in many of Kotak Mahindra Bank services. And just to alert our viewers, the credit card portfolio that actually formed about 3.76% of the loans in Q1 FY25 after the restriction had been put in place versus 3.9% of the loans that it formed at the end of FY24. Back to you.
Okay, all right, Abhishek, thanks for that. Now, just for context, earlier this month, MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, did speak exclusively with CNBC-TV18, and he had reiterated that the bank is engaging very actively with the RBI almost every week in an effort to lift the restrictions. Take a look.
And like in every crisis, there's an opportunity. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress, and we'll continue to do it.
Okay, that's Kotak Mahindra Bank in focus, and more visuals coming in from NCPA in South Mumbai at Nariman Point. Mr. Mukesh Ambani, Ms. Neeta Ambani, they have arrived as well. And of course, they're in conversation with members of the Tata Group. Yes, we see Akash Ambani there as well. So a lot of dignitaries, leaders from the world of business, the world of politics, of course, all of them coming together to pay their last respects. Of course, the proceedings, as we understand, from here on at 3:30, the procession will be moving towards Worli, where Mr. Ratan Tata will then embark on his final journey. Okay, all right. We'll, of course, keep bringing you more updates as and when they come through. For the time being, let's shift our attention back to the market. We have Deven Choksi joining in. Deven, so just to address Kotak Mahindra Bank and the excitement that seems to be surrounding the stock, what do you make of it?
Yes, very good afternoon. Well, I believe most of the fundamentals are, I think, well in place. This company showed the character of not getting aggressive when probably I think the market situation was quite delicate. Particularly, I'm referring to the COVID and post-COVID period. And they tried to preserve the assets more than, I think, getting ventured into, I think, higher amount of generation of AUM. So that is one typical thing that I think they did. Maybe I think they lagged behind in the growth, but at the same time, I think they prevented the balance sheet to get ruined. So that is a good point, which I always thought that I think is in favor of this company. Plus, all in all, put together, all its, I think, subsidiary business, the franchises that they have created, be it asset management company or NBFCs inside, or maybe insurance companies, stockbroking companies, all of these franchises that they build, I think they have built them to a good size. So frankly, today, Kotak Mahindra's stock price, if as an investor I look at it, whether you are adequately finding the valuation reflected of all the subsidiaries that they are having, the books, I'm not too sure. Maybe I think some of the subsidiaries deserve much better valuation reflection. into the books of Kotak. So obviously, I think we remain confident about the business prospect going forward, and we believe that I think this is one bank where probably I think you can have the compounded rate of return continuing in subsequent period of time, having stabilized in last 4-5 years. So that's where I think the opportunity lies. Maybe some amount of contra buying and holding this kind of company in your portfolio is something what we advocate, and we put our money behind it, I think, in this kind of situations.
Tata Chemicals is a stock which continues to see very large volumes. It was the top traded counter even at open, and now it's up nearly 5%. But some of the other names like Tata Elxsi reports numbers later today along with TCS, and that stock is a gain of about 2.5%. So that's higher. And Tata Investment, the holding company of all the Tata Group companies, that's seeing a lot of buying interest. I think one of the guests, I can't remember who, but he said if you had to buy, when asked if you had to buy one Tata Group stock, which one would it be? And he said, I think it would be Tata Investment. I think it was Ramdev Agarwal, right? Yeah. It was Ramdev Agarwal, and that's a stock which is up close to about 8.5%. Devin, anything on generally people avoid group, holding companies because of the kind of discount, holding company discount, etc. But amongst all the Tata Group companies, which is the one that you like the most from here on?
Well, I think it's a different businesses, I think, which they have been having, and probably I think that's where the interesting part is. We continue to, I think, buy the investment thesis in Tata Elxsi and Tata Technology, because we like the technology-led businesses, and we believe that I think these are the two companies which are probably, I think, right in forefront of taking the advantage of some of the niche play that they have created for themselves. Other side, I think the Tata Motors particularly, it looks, I think, interestingly positioned from the point of view of higher amount of consumer share allocated towards the mobility segment. And that's where I think this company is looking, I think, relatively more interesting. We continue to like, I think, some of the consumer businesses, but at the same time, currently the valuations are slightly reached. I believe that I think with the time correction, if some kind of moderation happens over there, it would be, I think, a good opportunity once again to re-enter into the Tata Consumer. So yes, I think we selectively look at different companies from investment point of view.
Okay, all right. Devin, request you to stay with us. Let's focus on a stock that's under some pressure. Star Health Insurance is under pressure after a massive data leak. Vamakshi joins us to fill us in with details. Vamakshi?
Well, Nigel, Star Health under pressure. Hackers claim that data of over 3 crore customers of Star Health has been leaked, and this breach contains sensitive information about all of these customers, which includes their names, their policy number, and even their policy claim details, as well as the medical reports. Now, hackers claim that Star Health CISO, who is Amarjeet Khanuja, sold them the data. Star Health, in response, says that we were the victim of targeted malicious cyber attack, and this resulted in unauthorized and illegal access to certain data. However, what they say is that rigorous forensic investigation led by independent cybersecurity experts is now underway. They've also said that the CISO has been cooperating in the investigation, and so far they have not arrived at any wrongdoing on his part. They're also closely working with the government and regulatory authorities at every step of this investigation. In fact, the Madras High Court, at their request, has also directed all, including third parties, to disable access to the relevant information. Overall, they say that operations remain unaffected and all services continue without any disruption. But given that this is a massive data leak coming in on their part, the stock is witnessing some selling pressure today.
Got it. Thanks a lot for that, Vamakshi. Devin, what do you make of this one, Star Health Insurance?
No idea, Nigel. I think only thing that as an outsider, probably when I look at the environment, I think as you grow, as you progress, probably this is one area in every enterprise which will have to be protected significantly. Be it a stock exchange business, be it a depository business, or be it any kind of, I think, data business which is there in healthcare, education, or any other personal area, including Aadhaar details, etc. I think that security mechanism will have to be strengthened in the country. Maybe when I interact with a lot of corporates, and I find that there is a general lack of awareness among the top management as far as I think the security mechanism to be followed. And that could be one of the reasons for which I think we are severely, I think, finding one and other companies, I think, getting affected with the kind of security issues. The data privacy and other issues, I think they are definitely, I think, requiring tightening and maybe regulations followed by implementations of the regulation something which one should look out for.
Okay, all right, that's Star Health. By the way, let's just look at some trends which are very clear in the mid-cap market today. One of them is that the public sector shipbuilders, they've had a good day today. Mazagon Dock, for instance, 8%. Garden Reach is still retaining its gain of almost 6.5%. So these are some big movers. By the way, Hitachi Energy, India is up about 7.5% as well. So a lot of stocks on the move out here. On the shipbuilders, Devin, whether it's Garden Reach or whether it's something like Mazagon Dock, the stocks are off the highs. I mean, they've all cooled off. Most PSUs have cooled off 20 to 25% from the peak. Would you venture in again now, or would you avoid the space altogether?
So before they corrected, I think they assumed the valuations of around 40 times to 80 times in some of the cases. And that's where I think my argument was that when the company itself is not going beyond 15 to 20% rate of growth, how would you assign such kind of fancy valuation to these companies? I don't think that I think the companies are ready for growing beyond 15 to 20% rate of growth, given the nature of the business, given the nature of execution of the business. So from a perspective of looking at growth and connecting the growth along with the valuation, I would always feel that I think rationality will have to prevail upon it somewhat of time, wherein your valuation would get moderated along with the growth rate which you produce. And that's the reality. I believe that I think the more than price correction, I think these companies will probably have time correction. And that's where probably you might get an opportunity down the line few quarters to buy into some of these good businesses because they really produce good visibility as far as I think the business outlook is concerned, particularly because of the government spending in this area. So yes, I think one can buy with a price correction and the time correction alone.
That's BEL, the view there, one of the latest entrants in the Nifty and is down pretty okay. Even the recent order inflows have been quite robust, but buy on any sort of a correction. Devin, thank you very much for joining in. We need to slip into a very short break. We'll come back and get chatting with Jitendra Shriram, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Stay tuned.
Welcome back. Well, what is Tata Trusts and why does the next chairperson at Tata Trusts matter? Vivek has been looking at a lot of the details surrounding, this very, very important entity. Vivek, give us the context and the numbers.
Well, that's right. So basically, the main reason why we've done this particular analysis is, remember, Ratan Tata was actually the chairperson of two important Tata Trusts, and we'll just do a deep dive as to what exactly are the Tata Trusts, what is Tata Sons, and why does the chairperson at Tata Trust actually matter in terms of the listed universe. Number one, first, what is Tata Sons? It's the principal investment holding company and the promoter of all of the Tata Group companies. Remember, 66% of the equity share capital of Tata Sons is held by philanthropic trusts, and Ratan Tata was the chairman of the Tata Trust. The Tata Trusts are mainly comprised of two large trusts, which is Sir Ratan Tata Trust and Sir Dorabji Tata Trust, and both of these trusts together own over 51.5% stake in Tata Sons. So now there is a big void over there, given the fact that the main chairperson is unfortunately no more with us. Now, what next? Number one, there are 13 trusts in total across 13 trustees in total across two trusts. 5 individuals are common trustees, amongst which are former Defence Secretary Vijay Singh, automobile industrialist Venu Srinivasan, Ratan Tata's half-brother and Trent chairman Noel Tata. Remember, Noel Tata is also married to Alu Mistry, the daughter of Palanji Mistry and the sister of Cyrus Mistry, businessman Mehli Mistry, as well as lawyer Darius Kambatra. So the way forward, the main thing is that clarity needs to emerge on the next chairperson of Tata Trust, and it is usually elected through majority consent among the trustees. What is at stake when it comes to Tata Sons? Remember, we've just done some of the analysis as far as the key shareholdings of Tata Sons in the listed universe is concerned. There are almost 14 large names where, when you're talking about the kind of shareholding that they have, it's quite significant. Amongst the key names where Tata Sons holds significant stake, have a look at TCS, Tata Motors, Trent, Tata Power, Titan. All of these companies, Tata Sons holds significant and majority stake. Just to give some perspective, out of the listed universe, out of the market capitalization, almost 16 lakh crore, when you're talking about the voting right, is actually controlled by Tata Sons, which is why this particular entity is so important, and clarity needs to emerge soon as to who exactly will be the next chairperson of the Tata Trust.
Absolutely, and this is, of course, the story going forward, and we'll watch this space pretty closely. Historically, the chairman of both Tata Sons and Tata Trusts used to be the same person, but of course, Mr. Ratan Tata crossed the age limit, so then he had to become the chairman emeritus, and there was another person running Tata Sons. And of course, we know what happened since 2016 when the Tata Mistry fight ensued, and after that, of course, Mr. N. Chandrasekharan took over as chairman of Tata Sons, and of course things have been running pretty smoothly from there. Now, of course, we will need to see who's going to be the chairman of Tata Trusts, which owns the 66%, as Vivek pointed out, in Tata Sons, which then owns various percentages in all these operating companies, operational companies. Jitendra Sriram is with us, senior fund manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thank you for your time. The market is not holding, Jitendra. Banks are doing better today, about 1.25% gain on the Nifty Bank, but broader market and the Nifty, just under 25,000 right now on the Nifty. Your thoughts? Do you think we're in for some range-bound trading here? The US market blasted off to new highs last night, so no stopping that. We're looking at what, 6,000 on the S&P soon. What would that mean here?
Correct. So I think India has had a phenomenal run over the last 12 odd months. So to that extent, you might see a little bit of sideways consolidation coming through for markets. Broadly, I think there are enough triggers as well for the Indian markets, but one would obviously need to correlate it with the valuations, which have gone up a little bit in the past 1 year. So my take is that, you first of all have this issue that India's growth seems to be on a steady footing. Yesterday also, the RBI reiterated that number in its MPC meet. Plus, you have the issue that at some point of time by the year end, the RBI will go through with a rate easing cycle, which would augur well for our capital markets as such, bringing down the cost of capital. So there are enough triggers, but I think near term, you will obviously have this little bit of a hiccup that you may have some bit of disappointment on the earnings front in 2Q because, Governmental capex was a little lower because of the election dynamics. Plus, you had little softer commodity prices, a slower China offtake in the second quarter prior to the stimulus and all that. So that could have a little bit of be a little bit of an overhang for markets in the near term.
How much of a concern will these subdued earnings be? We were chatting with Gautam Dugad, and he said for this year, we're likely to see a 7% earnings growth, and it's the first time in 5 years we will have a single-digit revenue growth, a single-digit earnings growth. And they've lowered the estimates even for next year, FY26. So how much of a concern would these earnings be? Is it price strain? Can it cause a deeper correction? What's the extent of weakness?
Sure. I think it's a good point because I don't think the consensus is still modeling in something like a single-digit growth. But having said that, I don't think that should be the base case because clearly, yes, there was a little bit of a slowdown in the governmental capex, but it is not that those budgets have vanished. Some part of it will come back, whether they hit that total targeted number this year by March or there is a little bit of a spillover, time will tell. But I would say there should be an acceleration in spending coming through in the subsequent quarters. So our take would be that we should be seeing some kind of a mid-teen growth in the large cap indices as such. So we should be on course for that. What could happen is some of the mid and small cap indices, there could be a little bit of a slowdown where markets were expecting fairly lofty earnings and you might see some earnings cuts come through. So to that extent, I would say that, I wouldn't be so worried on the large cap space at this point of time, but maybe mid and small caps will see some earnings tone down.
Okay, all right. Hi, Jitendra. Good afternoon and good to see you in. Today, we kickstart the earnings season, right, with TCS. And getting into these numbers, I've been hearing so much of positive commentary. On days that the markets were low, in fact, the IT index was holding up steady. Today, there is some kind of nervousness getting into the numbers. But the broader consensus is second half of the year, we'll see a higher amount of spends. You'll see spends pick up. And FY26 onwards, we'll see growth. Are you in that camp?
Yeah, I think overall, see, the big point was there was a ebbing of discretionary spending in one of the major markets, which was US, when rate hikes were coming in one after the other at a brisk clip. Now, US has clearly made its stance known. So you should see a perk up in discretionary spending. And I would also go back to one other important read across, which is the Accenture results, which came out in end September, and where they did see a 1 to 3% organic growth. I'm ignoring the inorganic part. I'm just saying the organic engine itself fired about 1 to 3%. And they are also talking of a latter year recovery as such. So I think one should take comfort with the fact that, something which is much larger and is able to see that kind of growth catalyst coming forth. I think Indian tech should also be probably basing out with this quarter and looking for some acceleration here.
No, absolutely. And that's something that we will watch out for. By the way, just a few other names, right? Because broader markets we've not really looked at in any great detail. We looked at them in early in the morning. The shipbuilders are still higher. Mazgaon and Garden Reach, etc. are up. Mazgaon, for example, is up 8% today. But from 6,000 rupees, stocks at about 4,400. Garden Reach, similarly, the high was about 2,800. Stocks at about 1,700, 1,750 or so. So there's still a far cry. Nothing on Cochin today. Cochin Shipyard is the other one, which has, I think, fallen off quite a bit. Stocks at about just under 1,700. The high was about 3,000 rupees. Any thoughts, Jitendra, on these names? I mean, the fallen defense companies?
Sure. I would say that, obviously we spoke about this little bit of a slowdown in the spending program of the government in the first half because of election dynamics. But what we have seen, even yesterday, there was an announcement of, I think about 120,000 crores. Cabinet Committee on Security actually released certain orders, which included 2 ship orders as well. So I would say that there will be some catch-up coming through. But I think the bigger issue which is plaguing the defense space as such, beyond a point, market will give lesser and lesser benefit to backlog because already a lot of these names have adequate backlog, which will sustain them for 4 or 5 years and so on. Beyond a point, it doesn't really help that, you keep on boosting that backlog. What will become far more relevant and important will be the execution dynamics, and we need to see far more action there. For example, in aviation, you have issues of engine supplies and stuff like that, which obviously is plaguing some amount of delivery schedules. So we need to get some more comfort. So I would say one should be positioned more in names which have slightly better execution tailwinds now, rather than only focusing on the backlog here.
Okay. By the way, Incred Equities has come out with a note on the Hyundai IPO, which opens next week on the 14th, and they're saying it's priced to perfection. The valuation has to be kept in context with the weakening car industry demand trend. They're saying that the superior EBIT margin of Hyundai will be difficult to sustain as the management embarks to expand its market share gap versus its peers, immediate peers like Tata Motors. So they would prefer Maruti and Mahindra as a preferred play in their India passenger vehicle market. Because the valuation, there is no valuation comfort when it comes to Hyundai. It's priced similar to that of its peers. Jitendra, the anchor book would be opening. Is Hyundai an interesting, attractive opportunity for you?
See, the passenger car segment in itself is something which will be a multi-year growth story for India. In a sense, you clearly have a situation where disposable incomes are rising. Plus the fact that some of these players who are straddling a better mix of UV versus sedans, which is the in vogue theme. Plus the fact that you have capabilities also coming through on where the business is itself transitioning, which includes hybrids, electric vehicles, and stuff. I would say that, from a longer term perspective, that model actually makes a lot more sense to us rather than, something which is more in the traditional space, I would say. So to that extent, I think it is definitely of interest as such.
Okay, well, Jitendra, we'll leave it there for now, but it's a good chat. Thank you very much for joining us this afternoon. And hope to speak with you again. We'll take a break. We're back. We'll get you some sort of short-term trading ideas. So we'll talk here and now. But there's more coming up in terms of stock stories on the other side. Stay with us.
Welcome back. Now, SEBI has recently amended the regulations governing the issue of debt securities, and this is worrying companies because amendment seems to require that every time a company raises debt, the document has to be approved by the entire board. Lata joins in with the detail. Lata.
Okay, what we are hearing from debt investment managers and their lawyers is that there is a new amendment that SEBI has put out September 18. They are amending the regulations which were issued in 2021. Those are the regulations governing companies which issue debt securities, basically debentures. And the point is the new amendment may lead to delay in doing a debenture funding altogether. Now, what the amendment says is companies have to ensure that, and I'm nearly quoting, the contents of the documents have been perused by the board of directors, and the final and ultimate responsibility of the contents herein shall also lie with the board. That's the amendment that has been added. Now, what was the position earlier? The earlier position as of August 2021 was something called the GID-KID way of doing things. Now, the regulations, under the August 2021 regulations, companies used to file with the exchanges what was called a General Information Document, or GID. And that will have all the detailed financial information about the company that's fully vetted by the board. And then when actually the market is very, opportune to raise money, at that time, the companies go and file a KID, a Key Information Document, in which only the price, the commercial terms are added, and that's filed with the exchanges. So this GID-KID method, the KID document, where only the key commercial information is filled, is not vetted by everyone. That is only vetted by the debenture committee, which has powers delegated by the board itself. Now, what investment bankers are now saying is that even exchanges are confused. Exchanges are saying, let's go and ask SEBI, because they are unwilling to take only the KID document, which is vetted only by the debenture committee. They're saying that the new rules look like the entire board has to peruse, as they say, the entire document. So we are also going to go and ask SEBI for clarification. The investment bankers say that because of the latest amendment, the problem is, as and when the market is propitious, you can't call the entire board. Especially in public listed companies, there are non-executive independent members. It's not possible to summon them exactly a day or two before the debenture is released. Now, I have a quote from lawyers at Khaitan and Company. They say that the original 2021 regulations, which is called the GID-KID method, were meant for ease of business, ease of doing business, easing of the process of raising debt. The latest circular will inordinately delay because it is not possible to call the entire board at short notice. Now, there are lawyers who also speak on SEBI's behalf. They are saying, why did SEBI bring the amendment? Because in a few cases, one or two cases, an NBFC reneged on paying back the debenture holders, saying that the board never approved this form of a debenture. So, the board washed its hands off. SEBI had to close that loop and protect the lenders as well, which is why they have brought this amendment that the final document also has to be vetted by the board. The board can't claim that it did not read the entire document. One doesn't know how it's going to end. Some via media has to be found where good companies should be allowed to tap the market at an opportune moment. At the same time, you can't have calling the entire board as the answer for full responsibility. We have written to SEBI for their comments. Their reply is awaited, but looks like it will be a work in progress.
Thank you very much for that. By the way, just departing from the news flow surrounding markets, 22 Grand Slam champion Rafael Nadal has announced his retirement. He will be playing his last match at the Davis Cup final next month. It's been long speculated that perhaps his retirement is close by, considering he's been struggling with injuries now for some time now. So it's another legend, a champion. And tennis, I think, has not been the same since Federer stepped down, and Nadal now retiring would be another, blow for, tennis fans like me who come in from another era. But let's get back to Mitesh now for a few BTST calls. Mitesh?
Yeah, I think BTST and Kotak banks are holding nicely today. So take a BTST and Kotak Bank with the star at about 1864 for targets of 1895. And it's prompted after a good correction. The stock is now showing signs of a bounce back. So BTST here, the stop at 430, 438 half, and a target around 448 here.
Okay, thank you very much for that. Pharma stocks have been under pressure since morning. In fact, the Nifty Pharma Index is down more than 2%. We've been wondering what perhaps is ailing these stocks. Vinny joins in with the latest news flow. Vinny.
Good afternoon. So yes, what we are understanding, and this is according to Reuters report that we're picking up, that the US Centers of Medicare and Medicaid have released a preliminary list of 101 drugs. Now they will be looking to sell these drugs for not more than $2, and this is for a month's supply from the channel, that is the Medicare channel. Now currently when you're looking at it, the list includes some of the drugs like penicillin, we have lithium, then some of the drugs that could be used for high cholesterol, blood pressure and other chronic conditions. So what this agency is working on is maybe this could be released and this could start coming into play from Jan 2027, and they're aiming to simplify the approach for offering low-cost drugs through these and medications through the Medicare channel. Now analysts are highlighting that this is something that is just preliminary coming. They're trying to understand what this is actually meaning, but if this is actually that Medicare system will be going through a direct tender procurement of these medicines, then it would impact the profitability of Indian pharma companies. Currently, analysts are highlighting that through the Medicare channel, what Indian pharma companies are selling through this channel could be somewhere around in the range of 20% of their sales would be coming in through the Medicare channel. And in that also, you would have to make a subset of 101 drugs, generic drugs that would be only in the list right now. So keeping an eye on that, but some bit of an impact today is coming in because of that. More clarity is still required on this. So we're keeping an eye on that.
Got it. Thanks, Vinny, for that. So that seems to be what is weighing on pharma stocks today. Amrish Palika joins us on the show. Amrish, what do you make of this news piece? Do you believe that it will impact pharma companies for the time being? They're all very, very nervous. Buy the dip or wait for clarity?
No, I think we should wait for clarity, because although we are saying it could be just about 20%, but still that is a decent amount to get. For the margins to come down. So I think it's better to wait for a while. And we have, anyway, seen most of these pharma companies had moved up decently well in the past couple of months. So I think the correction also could be decently steep.
Got it. All right. Amrish, normally when you join us, you also fill us in with one stock that's on your radar. Which one is it this time around?
Nigel, it's MTAR Tech. That's a leading precision engineering solutions company which manufactures components and critical assemblies for sectors like nuclear, space, defense and aerospace, as well as clean energy. And they have developed a number of import substitute products also. Clean energy products, that constitutes about 75% of the total revenue. Nuclear is about 15%, and space and defense is about 10% of the revenue. Q1 earnings were a bit weak, because of which we have seen a decent correction, but the management commentary was very positive. In fact, they are expecting Q2 to show the highest quarterly revenues till date, and they are indicating that FY25, the growth will be about 35% on the top line. EBITDA should remain at about 22%, which actually means that the second half will be much better. Diversified order book of about 1,000 crores plus as of date, and because of the government focus on nuclear energy, clearly MTAR has a number of products in that space, so that's also positive. So FY26, I'm expecting an EPS of about 65, and with that, the target is about 2,275.
Okay, all right, Amrish, got that. Stay on the markets, very, very quiet, just about 21 points in the green. The mid-cap index is actually still tracking some red. We'll take a break and come down. We'll be in the last leg before the market close. Welcome back. It's a bit of a weak afternoon for most of large cap IT, TCS, Infosys, Tech Mahindra, Wipro. All these names are actually fairly weak. They're not helping the bulls' cause at all today. The bank Nifty, however, is retaining a pretty solid 1% up move. Of course, the big next event for the market is the TCS numbers. And Rima has been telling us, Rima, that it's going to be a flattish quarter for TCS in all probability.
Well, 1.2% revenue growth is the CNBC-TV18 poll in constant currency terms. But this time, the growth expectations are fairly diverse. So the range is quite wide on the top line and even on the margins. The reason why the street is expecting revenue growth is because of the BSNL contract. But the same BSNL contract could hurt the company's margin. So typically in Q2, you see a margin expansion because in Q1, margins come down on account of increments. So normally in Q2, you have about 100 basis points margin expansion, quarter on quarter. But this time, according to the CNBC-TV18 poll, margin expansion could be limited to about 20 basis points. And that's because the BSNL deal is a little low margin. But again, as I said, the poll is fairly wide. There are some people who are calling out for 100 basis points margin expansion, and then you've got some others who are expecting flat margins. Last time, the management said FY25 to be better than FY24, that they're not calling out growth to be sustainable. They said that the aspiration of 26 to 28% margins remain, and the street will track the deal wins, gives you revenue visibility, generative AI. Last time they said the AI pipeline is $1.5 billion versus $900 million in Q4. So how that AI pipeline number moves quarter after quarter will be tracked. Europe has been a bit subdued for the industry, so if they provide any comment on that, the recovery in financial services, North America, discretionary spends, etc., the softer aspects, and even hiring. Hiring last quarter was positive after 3 quarters of a decline. So is that something which sustains?
Okay, fair enough. So let's see. Maybe, just a bit of a pause of a quarter, really. Nothing much more to it. But let's ask Amrish. Amrish, what would you say? What is your expectation from large cap IT? And I think people are expecting Infosys actually to deliver better than TCS in this quarter. What do you like here?
No, from a longer term perspective, I like both TCS and Infosys because clearly I see green shoots in IT. But then, yes, Q2 can be a bit tepid.
I think we've just lost that line with Amrish. Anyway, we're down to the last couple of minutes of close. It's been a really quiet day, actually. Let's see if we can get that final take on IT from Amrish. Yes, Amrish, I think we can hear you now.
Yes, Ravi. In fact, I'm decently bullish on the IT space, and let's not go only by this quarter, although it could be a bit tepid as compared to Q1. But in case we see a correction in the IT space because of the tepid earnings, I think it's a buying opportunity because if you're talking of the next 3 to 4 quarters, clearly we are seeing some green shoots, and management of most of the IT companies also, have been positive. So I think it could be a buying opportunity.
Okay, Amrish, just counting down to a close. It's been a somber session for the markets due to the demise of Ratan Tata. For the markets, it's largely a flat close. On the way up, you had banks outperforming. The Nifty Bank up 1% with Kotak Mahindra Bank, HDFC Bank doing the heavy lifting. But the gains that you got from the banking stocks were offset by the weakness in pharma. The Nifty Pharma Index down 2%. IT Index down more than 1% towards the close of trade. And even FMCG names were soft with the index down close to about 0.4%. Mid-caps, though, are likely to end in the red.
Yes, the mid-cap index losing a fair bit of ground. If we talk about some of the key movers and shakers in terms of volumes, then you have names like Reliance Power, IRB Infra, some names like Ujjivan Small Finance Bank, Zomato. These are the ones which have seen about 1% to 2% drop, but with large volumes. Aside of that, obviously it's pharma. We discussed those concerns around perhaps some new regulation in the US that could be hurting some of the generic pharma producers. Cipla, Torrent Pharma, Lupin. Actually, the entire pack was down very, very sharply today. Nykaa lost about 3% as well. Ola Electric has lost another 5% as more scrutiny continues from the government as well. Nazara was down about 4%. So quite a few names on the way down. However, there were the winners, and I think in the winners tally, the PSU shipbuilders, they really stood out tall. Mazga was going home with a gain of about 8.5%. Garden Reach about 7% higher.
Some of these NBFCs, the RBI warning yesterday came for microfinance and NBFC companies, and they were all higher yesterday. But today, I'm just, Aptus is down 3%, Home First is down 5%. And I think a few other NBFCs Bajaj Housing Finance is down about 3% today. I mean, these were all up around 3-4%. So they've all kind of reversed their gains. Of course, we've been highlighting a microfinance company, high-quality microfinance company, Credit Access, which of course has been under pressure, and many others on the MFI side are also under pressure. So both housing finance, and these are all, by the way, private, not the Bajaj housing, but the others are all private equity funded. I mean, so you're seeing some pressure on those specific names, because the RBI did call out some of these investor PE funded NBFCs, and the fact that maybe investors were pushing these companies for growth and asking them to make loans which were slightly higher risk. All right, so the market ends at about 25,000, so just 25 points in the green, flat, but Nifty Bank goes home with a 1% plus kind of a pop. It's a wrap of this edition of Closing Bell. Markets forward will pick up on the action. Rima and Nigel will take you through that. And of course, we're also awaiting TCS numbers, which should be out soon. Stay with us.